What is up, everybody? Welcome back to another episode of Bitcoin and Markets. Happy Monday out there. Happy Eclipse Day. We are, I guess, broadcasting right as the eclipse is hitting the East Coast, but it's nothing special. I went out there with my kids and we looked through a box. We didn't have the glasses, but we set up like this projector box to look at it. I guess it's kind of cool for kids to see that. But anyways, so happy Monday. Hope you guys are doing well. Bitcoin price pump here a little bit today. We're going to go over the price. But being Monday, it is Bitcoin Fundamentals Day. So every Monday I put out my free weekly newsletter. And then we live stream, go through it, I go on my tangents, and we talk about it. So I will be checking the comments, questions. If you're on YouTube or Rumble, I'm also going out on Twitter. So welcome, guys, on Twitter. I'll try to go into that thread and look and see if you reply to the tweet that the live stream is on. That's a little bit harder to keep up with. And Telegram as well. That's my main community, t.me/Bitcoin and Markets. I'll be checking the comments in there as well later. But okay, let's jump right in, share the screen. And which one do I want to go to? I can hear my boys being loud, or my boy with his friend, as I search for the right tab. Okay, here we go. Let's go to the homepage first, though, bitcoinandmarkets.com. That's where you can sign up for the free weekly newsletter. You can also support my content there. Premium newsletter, $15 a month goes out, and try to do that weekly. Here's the one that went out this morning. Talk all about gold, tons of charts going through here, and Bitcoin forecast, short, medium, and long term. So check that out. I think it's a very reasonably priced premium newsletter in the space. I'm looking at some of these other macro guys, and they're charging 10 or 20 times as much for, I think, not nearly as accurate content. So check out bitcoinandmarkets.com. I appreciate everybody that supports. Also, check out bmpro.substack.com, Bitcoin Magazine's pro macro newsletter. Had a couple good posts last week. I'm really liking the ones that are based off of the trackers that we track all sorts of metrics. If this will load. Come on, man. It was slow earlier today, but trust me, those are some good high quality content pieces over there. So check out bmpro.substack.com. Okay, back to my website. Let's zoom in a little bit so people can see. So, fundamentals report number 284. Yes, I have been doing it all that time. So I am a Bitcoin OG, going back content from 2016. But I've been around Bitcoin since, Mt. Gox, slightly before Mt. Gox. So I've seen a lot, and coming from an economics background, but also a military background. So have a kind of unique way to view Bitcoin. Okay, so first I always start out with a meme. You guys are probably familiar with the black hole meme. It just feels like this right now, that almost nothing anybody can do can escape the logic of buying Bitcoin right now. So Bitcoin is swallowing the world. Thought that was a good meme to start off with. All right, snapshot of Bitcoin. So weekly trend is, I said pro-halving. I meant to say pre-halving. Oh, man. Do I want to go in and fix that live? Because these type of errors kind of get at me. Yeah, let's do that. Let's fix this live. Let's go in here, and I will update this to pre-halving. Oh, man. Right off the bat. Okay, update. And refresh this page. There we go, pre-halving. Everyone's kind of waiting for the halving. We're, 10 days away, 11 days away to the halving. So under 2 weeks. The price is looking forward to it. Investors are looking forward to it, kind of sitting on the fence, waiting to see what happens with this. And if people haven't heard of Bitcoin and they haven't heard of the halving, they're going to be doing a lot of learning over the next 2 weeks. So this is where we are on the weekly trend, is pre-halving. Media sentiment is neutral. Didn't see anything super bullish or super bearish this week. Network traffic slightly elevated. Let me just maximize this. Mining industry is growing. We'll take a look at all of these different sectors of Bitcoin, everything that's going on in the space. Usually I break it down with headlines for Bitcoin and macro, then price, mining, and then miscellaneous, usually inscriptions or layer two, something like that. So we'll go through all of these different sections. All right, price 71,903 at the time of writing. That's almost 2,500 above where it was last issue. Excuse me. Market cap is 1.416 trillion. Satoshis per dollar 1390, and one finny, that is my preferred denomination of Bitcoin. You can see that's right in the middle of the decimal places, is $7.19. When this hits $10, we're at 100,000. When it hits $100, we're at 1,000,000. So that is kind of a nice unit to use. Mining sector. Last difficulty adjustment was -1%. Last week, it was estimated to be +1%, but it has surged. Hash rate has surged. So we're estimated to be a plus 3.9% in 2 days. We'll see if that can tick over to 4. Mempool, 189 megabytes. I think it was down to about 175. And then just in the last 12 hours, it shot up to 189. And then you can see the requisite effect on fees, $4.23 to get in the next block. That's 42 sats per virtual byte. Low priority fee is $3.73. So you can save yourself 50 cents if you don't mind waiting for an hour. There's also like a no priority fee, which I don't include here. And that's if you don't mind it taking days to get into, to get confirmed. Okay, Lightning Network. So I track the capacity in Bitcoin and the number of channels. Another bad week for Lightning. Almost 1% down on capacity. So they lost 39 Bitcoins. And channels also almost 1% down. They lost 440 net channels. So Lightning Network, I would love to see it grow, but it is just not growing. I would be interested to see like the architecture of the Lightning Network right now, because people thought it was going to be decentralized. It's gotten more into becoming distributed, where there's hub and spoke model, which isn't necessarily a bad thing, as long as there's not like one big hub or maybe 3 to 5 big hubs. You have hundreds of hubs. That would be okay. Or thousands of hubs and millions of users. But of course, we're not there yet. And so I just track these numbers to see how Lightning Network grows every week and to see if it's catching on. But over the last 6 months, it has been declining very slowly like this, like 1% every week. Okay. In case you missed it, this is my Bitcoin Magazine Pro content that went out. Government sales meet insatiable demand for Bitcoin. And that is like Coinbase selling, not Coinbase, U.S. Marshals sending a bunch of coins to Coinbase and possibly selling those. But they're meeting the insatiable demand from banks and ETF providers and things of that nature. So that was a fun piece to write. Market tracker, Bitcoin's tipping point, gauging market direction with short-term hodler behavior and macro forces. And then we have our mining tracker that goes out once a week. How is the Bitcoin network preparing for the halving? And we look at, this is mining specifically, looking at the stock behavior for the major miners. We also look at different things from on-chain network statistics, and then of course network traffic numbers, things like that. Okay. Remember, I did get out this one this morning. Gold and yields tell us everything about the upcoming recession. Maybe I'll have to expand on that in a future live stream, but for right now, this is going out to my premium subscribers. So thank you guys for supporting. And nothing new on these two. Okay, let's get into the headlines. So again, if you're joining me a little bit late, this is the free weekly newsletter that goes out. It's a monster. I break it down into headlines for Bitcoin and then macro headlines, Bitcoin price analysis, and mining industry, and then miscellaneous like inscriptions is what I'm kind of focusing on right now in that miscellaneous section. So yeah, let's get into the Bitcoin headlines. Morgan Stanley versus UBS. Morgan Stanley is reportedly vying to outpace UBS to become the first wirehouse to offer spot Bitcoin exchange-traded funds ETFs. And in the U.S., Andrew Abacus on X citing internal Morgan Stanley notes, suggested that the bank might soon announce its entry into Bitcoin ETFs. This development is part of a broader race among global banks to incorporate Bitcoin ETFs into their offerings. And here was the tweet. Several notes from the Morgan Stanley execs is that they are looking to be the first wirehouse to fully approve the Bitcoin ETFs. So just think about all this demand that has come in. This is without the big guys really dipping their toe. I mean, maybe slightly dipping their toe in, not poo-pooing on it, but they have not even taken the first step into this pool that is Bitcoin. And these guys are starting to compete over who can get approved first to offer this to their clients. So this is huge, huge news. Okay, next topic up or story up. Miner claims supply shortage, forcing banks to seek miner BTC. So the success of Bitcoin spot ETFs has led to a notable shortage in Bitcoin supply, prompting prominent Wall Street banks to directly approach Bitcoin miners for purchases. Hut 8 Mining Corp, a leading Bitcoin mining company in the US, revealed in an interview that it has been approached by major banks seeking to buy Bitcoin to mitigate the shortage experienced on centralized exchanges. And actually, let's go into this a little bit deeper because I want to, if this page will load now. I don't know what's going on with Substack, if Substack's having some issues, but I'll let that load and I might come back to that. Okay. So that's all I have for that one. If this will load, okay, here we go. It loaded. Substack. UBS wrote about that. Here is the miner claims shortage. And what I did was I wrote down some reasons why miners would buy or why banks would buy direct from miners. So they have direct supply access. Banks ensure immediate Bitcoin acquisition, bypassing the complexities of the options market. Price considerations. Direct purchases may be more cost effective than options, which include premiums. So yeah, it depends on how long you're holding it, when you want to actually acquire or take delivery of these things. If you can even get on the options exchange that is appropriate for what you want to do, because there's not a lot of possibility for that in the United States. Market impact and discretion. So direct buying from miners can be discreet, even though this Hut Miner guy is going out there saying it in an interview. But this could minimize the market price impact. If they acquire 1,000 coins from a miner, they could do it kind of on the down low a little bit. We would notice it in the miners' reserves that they hold in Bitcoin, but at least there's a little bit of discretion, and you're going to not have so much slippage in the market. Okay, control and verification. Banks can verify the provenance of Bitcoins, ensuring that they're not linked to illicit activities. So this one, I mean, Bitcoiners don't really care about that so much, because the old saying with gold was gold doesn't stink. It doesn't have taint on it, right? Because gold is gold. Bitcoin is Bitcoin. Now there's talk that taint from old Bitcoin transactions is a drawback for Bitcoin. And I can see the argument for that. However, I don't think that it makes it non-fungible. Big guys, though, big banks that are highly, highly regulated, the most regulated industry in the world really is the US financial system. They might not want to go this route. They want to have this provenance that these Bitcoins are straight from mining. So that could be big in their decision making. Avoidance of market slippage. We talked about that. Regulatory clarity. Buying direct might offer clearer regulatory compliance compared to navigating derivatives markets. So those are all the reasons why these miners or these banks might be approaching miners to do this. Okay, let's go back to the weekly newsletter. Government set to liquidate $2 billion in Bitcoin seized from Silk Road. The U.S. government appears poised to sell a significant amount of Bitcoin, approximately 30,174 BTC, which it had previously seized from the Silk Road online marketplace. This brings up a lot of bad feelings in the Bitcoin community. I mean, just reading this myself, I get like this ick feeling because, they seized this from Ross Ulbricht, and he's still in jail, unfortunately. Um, it's just a really, really bad feeling. I think this is one of those things that's going to be it's a deep wound. And Ross's imprisonment is going to be a deep, deep wound in the Bitcoin space for a very long time. I hope he gets out. I hope he gets pardoned from perhaps the next president, but we shall see. We will keep fighting. And every time I see something on Twitter about Free Ross, I try to retweet it every single time. But anyways, okay. A test transaction of 0.001 BTC was observed moving to Coinbase, hinting at imminent liquidation, similar to a previous incident where the government sold about 9,861 BTC. This pattern is preliminary on-chain. This pattern of preliminary on-chain transactions aligns with past practices observed before official sales disclosures. So what I did for BM Pro was I went through and I got the list of all the previous sales, the amounts in Bitcoin and the amounts of in dollars, and then I tried to put them basically where they go. And you can see there are some that correspond with tops, like this very first one. Even though Mt. Gox exploded, and this is the Mt. Gox bear market, but there were quite a few of these larger Bitcoin sales right there in that bear market. One in the bull market here, one up at the top in 2017, December 2017. So that one is interesting. Where is it? Actually, it was in January of 2018. That was a pretty big one. 3,800 Bitcoins, $42 million worth, sold pretty much at the top. That could have affected some things. Then one right before the big sell-off in this bear market. So it's kind of interesting. They did sell here towards the top, pre-COVID top, right when COVID hit. So I don't know if that would have corresponded to a top necessarily. No. Sorry, my son. This one here up top, I made it faint because it was only less than a Bitcoin, $53,000 that they sold up at this top. I don't know why they sold it there and why they sold that little. Were they just trying to mark the top? I don't know. But their biggest sale ever was this one from March, and it happened right in the middle of this bull market. So nothing here comes close to the 2 billion in sales that they are talking about. So this would be monumental if this happened. There's monumental demand right now. I think there is some thinking about this. I mean, if you look at these, it does look kind of strategic in a way. Let's dump some and try to push down the price. This last one, this largest sale so far, did cut the bull market and make it go sideways for, what is that? Almost a year. So anyway, it does look a little strategic. It's a little fishy. Of course, I'll be watching it and reporting on it. Okay, next headline. We're still in the Bitcoin headlines, and we're going to go in the macro headlines, and then I'll check. Actually, after the Bitcoin headlines, I'll check the comments. So put your comments and questions in there right now. Solana glitch still ongoing. I discussed this article on the live stream on Friday. 75% of Solana transactions are failing as bots dominate swap count. Then we got another update from the Solana team members themselves. In a post, this is quoting from this linked article. In an X post, Solana co-founder Anatoly somebody stated that dealing with bugs was more complex than keeping a network active and operational for users. Quote, dealing with congestion bugs sucks so much more than total liveness failure. Okay. So for anybody new, liveness is just the next block tick-tock. Okay. Is there transactions happening? Is the blockchain progressing forward? That's a liveness. So congestion bugs means that there's too much liveness, really. There's spam going on. So he's saying that the spam, too much liveness is better than not enough liveness, or too much liveness sucks worse than not enough liveness. The later is one and done. Bug is identified and patched, and chain continues, the post read. The former has to go through the full release and test pipeline. Shipping fast is impossible. Anatoly, his announcement follows co-founder Raj post on Twitter earlier this month, which addressed the overall concerns of the Solana chain and the deployment of world-class personnel to tackle the issues. So people are having to worry about this Solana thing when they shouldn't have to. I mean, these are all just scams and stuff. I said on Friday, I pointed out, I made a major point that Solana is supposed to have a 400 to 800 millisecond block time. Let that sink in. Okay, that's just insane for anybody that understands this technology. The only thing you have to hear about Solana to know it's a scam is that it wants to have this type of block time. It's an obvious red flag. It has to be centralized to maintain that sort of block time. So it has to be a scam. And then some guy dug up, he said, still quoting from this article up here. Let's see, where's that coming from? Cryptonews.com. According to data from blockchain expert Dagnum PI, Solana is currently congested with an average ping time of 20 to 40 seconds. That's longer than an Ethereum block. Much longer than 400 to 800 milliseconds, signaling delays in node communication. Well, that's obviously the case. You know, when you run up on this traffic, you cannot keep consensus. Because I was talking on Friday, I was like, well, what if you don't have a broadband connection? What if you have really slow internet where you're at? So you cannot, what if you have, I don't know, some issue with your local internet or your local network? You cannot keep up with 400, 800 millisecond blocks. It's absolutely ridiculous to think that. It has to be centralized to keep pushing that forward. According to data from Cryptomaniacs, Solana has witnessed 9 blockchain network outages since 2021, with over 150 hours of downtime. And all that trouble, all that fake decentralization, that is all for meme coins, jokes, spam, and outright fraud. Imagine if there were actually systemically important transactions on Solana. What a disaster. Okay. That's all for Bitcoin headlines. Let me go in and check any comments here we have. CK, what's going on, my friend? Haven't seen you in a live stream here in a while. Hope you're doing well. Dex Invictus, what's going on, man? Okay, I'm going to go check. I'm not used to checking Twitter, but I'm going to go to this video and see if there's anybody responded to this tweet. No, I'm going to retweet it. Okay, and finally, let's go to Telegram and see if there's any. What is a wirehouse? Oh man, that is a great question. I am going to get that for you right now, because I asked ChatGPT that. So I'm going to go and see if this is correct. That's not it. Oh man. Sorry, I want to answer this for AJ. Okay. I found the discussion. And I'll go ahead and share this tab. Let me see, make sure this is going out. Okay, so I asked ChatGPT, what is a wirehouse in this context? In this context, a wirehouse refers to a large national brokerage firm that traditionally had a network of offices connected by a private telecommunication system, or wire. This term dates back to when these firms used proprietary communication networks to disseminate information and execute trades quickly across different locations. Nowadays, Wirehouse offers a wide range of financial services, including brokerage services, uh, blah, 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 financial planning, and underwriting. The term in the article is used to denote major financial institutions like Morgan Stanley, UBS, highlighting their competition to introduce Bitcoin ETFs to their expansive network of clients and offices. So, kind of just a group of clients and offices that work with Morgan Stanley. So, that's what the Wirehouse is a centralized thing. Okay. Back to CK Gray Stream. Oh, thanks, man. Yeah, I don't drop the podcast version very much because it adds so much to my week. And I'm doing a lot of writing. So I need to I need to keep the podcast stream fresh is about all I can manage. Okay, let me check Telegram one more time. Can you point says, can you comment on your recent recession take? Came in late. Yeah, I have not commented on that. I did write about it this morning in the, let me see, the title, Gold and Yields Tell Us Everything About the Upcoming Recession. So I wrote about it in there. I want to let that sit with the premium subs for a little bit, and then I'll talk about it. But everything seems to be progressing in a logical fashion. Now, there are a few things like the 10-year yield being so high that does not 100% fit. But it does fit if you just say, okay, there is like people are, it's good, the bottom's going to fall out faster when it comes. So you have to make a few little changes to the recession call there, but I will be covering that a little bit in the macro section here and then on future live streams. Okay. So let me go back down here to macro. Swiss central bank cuts rates in surprise move, getting ahead of global peers. So the Swiss National Bank cut its main interest rate by 25 basis points to 1.5%. So they're still way down there. Of course, the Fed is at 5.25 to 5.5%. So they cut this on last Thursday, a surprise move which made it the first major central bank to dial back tighter monetary policy aimed at tackling inflation. Now, I just want to say this about major central bank because everybody, poo-poos on the dollar, right? But what's the next alternative? The Swiss franc is considered a major currency, and the Swiss National Bank is considered a major central bank. Yet they're like probably 1% or less of the global financial system. The euro is number 2, obviously, and it's sitting around 22 to 25%, something like that, where the dollar is 58, 60% of the global financial system. So these major central banks, you have to take this with a grain of salt, but it is one of the top 10 currencies and also one of the top 10 central banks, even though it's like smaller. Sorry, hold on a second. All right, sorry about that. UPS guy came to the front door. Okay, so major central banks. It is one of the major central banks, but it is smaller than even one of the 12 Federal Reserve banks, like Kansas City, Atlanta, Cleveland. Any one of those banks is bigger than Swiss National Bank. So take this with a grain of salt. It is the first major central bank to cut, though. Okay, the Swiss National Bank is the first central bank to declare victory over inflation. The step follows a drop in Swiss inflation to 1.2% in February, the ninth month in succession that price rises have been within the Swiss National Bank's 0 to 2% range. Quote, the easing of monetary policy has been made possible because the fight against inflation over the past 2 years and a half have been effective. Blah, blah, blah. European Central Bank is expected to make its first reduction in borrowing costs in June. We'll see if that happens. And the Federal Reserve has left its benchmark rate unchanged, but it's looking for 3 cuts this year. And a lot of people are like, oh, no, we're not going to get 3 cuts, blah, blah. The Fed could cut 75 basis points in one meeting. It could cut 1 basis point or one entire percentage point in one meeting. If the bottom drops out, if we have a Q3 problem, and the bottom drops out, that's they could cut 1% easily in one meeting. So 25 basis point cuts is not out of the question. Okay, next story. Gold premiums explode in China. And here's a chart that I pulled from Eric Balkunis. I hope I cited the source on this image, but it's from Eric Balkunis on Twitter. And you can see 30% for this gold. It's an equity. It's a equity ETF, so it has a lot of gold companies that are involved with the gold industry, and it's not just straight up like a gold spot ETF or something. So yeah, this is a 30% premium on this. Trading for the China AMC, blah, 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 gold industry equity ETF was halted until 10:30 a.m. Monday local time in order to protect investors' interests. China Asset Management Co. said in a statement Monday. It was the second trading suspension for the product since last Tuesday. The decision came after the fund's premium over its underlying assets increased to more than 30% on the 3rd, the highest on record, Bloomberg compiled data shows. The ETF's price had gained over 40% in the past 4 sessions before falling 10% after trading resumed on Monday. I said they don't have access to the Bitcoin ETF yet. There are futures ETFs in Hong Kong and spot ETFs in Hong Kong just around the corner, but mainland Chinese nationals can only send $50,000 per year to Hong Kong for investment. There is ways around this with gifts and family members and stuff like that. But for the most part, it is $50,000 a year per person to invest in Hong Kong. But that's a lot of buying pressure. There's a lot of demand for this, for safe havens right now in China. This follows the mania from a couple months ago where S&P products on the Chinese stock markets were trading at a similar premium. So they had, like in S&P 500 index fund on trading in Shanghai. And it was at a 30% premium as well. And I reported on that. That was like 2 months ago, I think. So there is this huge demand for safe havens over there in China. And that doesn't match really with, being bullish on China. Even their growth projections of 5% or whatever the official growth mandate is right now, that doesn't match with that. So everything coming out of China right now, I would be very suspect of it. Okay. Next story for macro. Not all is well in the U.S. jobs market. Recession is around the corner. So all jobs added for March were part-time jobs. You don't get a second or third job if the economy is doing great and you are secure in the main job. So here is this image. You can see full-time -6,000 and part-time added almost 700,000 jobs in March. All net job gains were part-time jobs. Not only that, but native-born workers have had 0 job gains since 2018, while foreigners are booming with job creation. And so you can see this one. The red line is native-born. This is what recession looks like. This is what a grinding job market looks like in a grinding economy. One way that I've described from the GFC. So the GFC is when the old system broke. It went from unsecured to now secured. What that means is you could get a loan and you wouldn't need, like the banks lending each other money. They wouldn't even necessarily require collateral for repo transactions and things. Now they require collateral. Now everything has to be is secured because it's something broke in the GFC. Now there's less trust in the system. Everything has to be secured. And this is just showing that even jobs uh, are stagnant, not for foreign born, but that's a much smaller group of people that we're talking about than native born. Okay. And the big one, in my opinion, is simply the gap or the difference between two of the government's own jobs reports. There are still 9 million. Oh, geez. There's still a 9 million gap in employed people and payrolls. Okay. So this is two US government surveys. The bottom one is a household survey that looks at employed people, and the top looks at payroll numbers. So if one person has two jobs, they would get counted twice on the green line. And that is still a $9 million spread. Huge. I mean, Powell must be looking at the green line, not at the red line, because this is stagnation. Okay. Bottom line, things are much worse in the US economy than the jobs number state. People are holding on for dear life. The turn into recession is pretty scary. Time to buy Bitcoin. So, another thing, a lot of people have been saying, the US is going to have no landing. The US is going to escape recession when Japan is in recession, Germany's in recession, China's in recession, UK is in recession, everybody's in recession except it seems the United States. The next four major economies are in recession. And can the US avoid it? Probably not. And the bottom line is the US economy might already be closer to recession than most think because of stuff like this, the gap in employment. So there we go. Next topic for macro, lack of solidarity is spreading. I've been saying it for a long time that NATO is a dead man walking. Global trust is breaking down and our interests do not align anymore. Here is just another example, a poll showing that even in the core NATO members, nearly 40% of the population doesn't want to get involved to protect treaty members. Add to this losing in Ukraine, and you have something that could simply disintegrate. If I were countries like Turkey, Hungary, and Poland, I'd be planning for what comes after NATO. And here is this chart. I did post this on Telegram. I thought it was fascinating. So in blue, that they should be defended by NATO. Of course, everybody thinks they should be defended more than that they should defend others in orange. And look at some of these. I think this is Montenegro, I believe. This one over here, only 33% think that they should be out there defending NATO members, even though they have a treaty that says they're required to help. Bulgaria, 42%. This Iceland was the bad one. So they 78% of their people said, yes, we should be defended, but only 47% that said that they would go want to defend their treaty allies. And of course, Norway, they're up here 87 and 80. This is where Schellenberger is from, I believe. And I think was just appointed as chief of NATO, right? So they're like one of the big NATO allies. There's also some controversy about what happened with Nord Stream. And Norway has been in that conversation with U.S. Special Forces and stuff. So, yeah, that's the situation with NATO. Now, why is this important? Because of deglobalization. I've been talking about deglobalization for a long time. Credit. Let me make sure I'm not muted on Telegram. I just had a singing feeling. Okay. Deglobalization. So this financial system we have now is a credit-based system, and it's based on trust. They trust the U.S. dollar. They trust U.S. arbitration. They trust the U.S. System that was set up around, the IMF, the World Bank, World Court, WTO, WHO, all of these different organizations, UN, of course. These are all U.S. provided and U.S. supported and maintained institutions over the last 75 years. You have to have a system like that. You have to have those types of international institutions to maintain some trust that makes a credit-based system function, because it requires this high levels of trust. But if we're getting to a point where, over half of the population in these NATO countries don't want to live up to their agreements, international trust is through the floor. And we see that through deglobalization. And so what happens to a credit-based system in that? It starts to break down. Credit stops expanding. You don't have private credit creation. The governments have to come in and start doing it. And that's what we're seeing in the United States. There's not enough private credit creation. So the US government is going out there and pulling a lot of demand forward. They're not printing money per se. They're adding to debt that they're borrowing from the future and spending it now. So it has an inflationary result, but it's not strictly printing money. But they wouldn't have to do that if people were out there doing business and lending and borrowing and all that stuff. And they're not doing that because we have this depressionary mindset. We're at the end of a credit bubble. Nobody's trusting anybody else. Starting to become a zero-sum game. In a boom time, it's obvious that the Austrians are correct. In a boom time, everybody gets richer. It's not zero sum. Everybody benefits. But in the crash, it becomes zero sum. People stop trusting their neighbors. People stop trusting their governments. People stop trusting their treaty allies. And the international system of trust that supports the credit-based system breaks down. And then you have deflation because the amount of credit falls, the amount of money falls. That's where we're at. And this image shows a very good representation of that. Okay. Guys, like, comment, subscribe. I'll look at the comments down below after this macro section. If you're joining a little bit late, Ancillary Bitcoin and Markets. Every week I put out a free weekly newsletter. I talk through it, go on tangents and stuff like that. Appreciate you guys showing up here on Monday. And what else? Going out on YouTube and Rumble, Twitter today. Mondays I'm going to be going out on Twitter. And Telegram is my home base. You can check out t.me/Bitcoin and Markets. Okay. What else do I want to say about that? Oh, yeah. So I have Bitcoin headlines, macro headlines, price analysis, and mining. We're getting through the macro headlines right now, and then we'll go into price here shortly. And that's it. That was the last macro headline. So let's get into price. Of course, I do have this professional tier on the website. It's $15 a month, and you get a weekly market proton that talks about all sorts of things that I, thinking about the market right now. Plus, every single time you get short-term, medium-term, and long-term Bitcoin forecast. Okay, so let's get into prices. This consolidation has been expected and predicted. Here are the main takeaways from my price forecasting over the last 3 weeks. And this is on the free weekly newsletter. If you just go back 3 weeks, this is what I've been saying. Most likely, we continue a consolidation for at least the next week, and it could stretch into the halving. That's kind of what we've been seeing. We're going to take a look at the live chart. I haven't looked at it in a couple hours. 2 weeks ago, I said a 44% move over 3 weeks until the halving is possible. We were looking at where could price go, and I said it is possible, but I think it's unlikely for there to be a big, up to 100,000 by halving. It would be healthy to revisit those lows again before continuing higher. And I pointed out on the chart like where we could revisit. But it is so hard to move down against the ETFs. So basically, we're going to go sideways. And last week, I said, I've been talking about cooling off and consolidation pretty much the whole month of March. Despite going sideways, there is not a lot of progress on cooling off this week. This leads me to believe that we will not have a significant pre-halving pump. But it also means that we won't have a significant post-halving dump. In fact, this could be a huge catalyst for a great post-halving pump. So lots of pump and dump there, but you know what I'm saying. This is setting us up for a post-halving pump in the consolidation. All right, let's take a look at the charts. Very clean pennant here. 50-day moving average coming up at the bottom of the pennant. We have the halving coming up in 11 days. It does look like we broke out here this morning, but we will see where that ends up. Let's go look at the live price chart before we continue. This is most likely a little bit different. And here we go. No, not much different. Still 71,600. We'll see where this closes, but it could close back into the pennant. And, this pennant is a little bit movable. You can say, oh, it's not touching everything perfect. So, that's not the end all be all. But we could, this does not seem like a strong breakout to me. I don't know about you guys, but this just does not feel like a strong breakout. So let's go back to the newsletter and see what I had to say about that. So there's the chart. For many reasons detailed on today's Proton, I think price is setting up for a big move, just not quite yet. The halving is a significant event, and while it is possible to pump into next week's halving, I think it is highly unlikely. Gold is rallying off a safe haven bid, which will roll over to Bitcoin. But technical analysis and behavior of the Bitcoin price under similar circumstances leads me to believe that we will continue sideways through the halving. And I have some typos in there. So continue sideways through the halving. Risk to short-term holders is declining. The short-term hodler realized price is 58,400, while the 50-day moving average is at 65,000. We would need to fall 20% from the current price and 10% from the 50-day to risk those short-term holders' weak hands. So I look at the short-term holder realized price. That is like the average of the last time, UTXOs that are a certain amount old. I think it's like 90 days old or 120 days. I don't know what Glassnode uses, but it can be different for different data providers. But all the UTXOs that have moved in that short-term period of time, what's the realized price of those? Those are weak hands. Those are people that bought recently, probably expecting the price to continue going higher, right? So you want as many levels of support between the price and the short-term holder realized price. I hope that makes sense. And we have a lot of room right now, a 20% gap. Now that's possible, but if we move 20% down and then we start liquidating weak hands down there, I mean, we're looking at a 40% drop. And I just don't see that in the cards with the halving and with the ETFs coming up. So there's a ton of support under the price right now above the short-term weak hands. So that's what I'm seeing. But that doesn't mean necessarily that we got to go higher. We can just go fake out, go up and down a little bit, go sideways to the halving, maybe a week after the halving, then go higher. Okay. There is also no strong sign for a major bullish move. And I was looking at CME futures premium. It is positive, but not much. MSTR, it's off its highs. Looks like consolidation. I saw a possible like head and shoulder. So like these aren't flashing signs of bullishness. And minor stocks are still mixed. The ones that have been outperforming, like Cypher and Hut 8, they were positive on the day. But like Riot and Marathon, some of the bigger ones are down. So there's no real consensus for a major bullish move coming up. Anyway, not yet, that is. They're all setting up for a big move. Everything looks to be waiting for now for the halving. Okay, so that's my price section. Let's take a look at the comments here real quick. If I can exit this full screen. Maybe. Oh, I'm over here. Okay. Dex and Vic Disgrace Stream. Thanks, buddy. All right, let's go to Telegram. Nothing new there. Okay, I'm going to try to go into Twitter and look and see if there's any comments here. And I'm not seeing any there either. Okay, I'm going to continue on. Here we go. Let's keep going. So, Bitcoin mining headlines: Paraguay proposes 6-month ban on crypto mining, citing electricity concerns. There has been lots of hype about mining in South America, the South American country of Paraguay. However, it seems their leaders have a different idea. This is part of the risk you take with geographic diversification. So, what did I mean by that? In previous content, previous live streams, whatever, I talked about specifically, this was in relation to Ethiopia most recently. But Ethiopia is a dangerous place. There's a civil war going on. There's not a lot of love lost between Egypt and Sudan and Ethiopia. They're building that huge dam that Egypt doesn't like. And Egypt has a much stronger military than Ethiopia. There's all sorts of trouble there. Okay. So there is risk. There's different types of risk involved with moving your mining operation to a place like Ethiopia, even though it makes your, I mean, these mining companies, I'm sure, do all of the numbers and look at how much it costs for security. But there's tail risk that you just can't price in. What happens if the civil war kicks off again? What happens if there's all sorts, big, major tail risk problems that are going on in Ethiopia? You can't really price that in. Where if you're in a stable country like the United States, at least relatively stable, okay? I'm not saying it's perfect, but it's relatively stable. You'd have much less tail risk. So you take on this risk through geographic diversification. And all these people that went down to Paraguay, they took a big risk. And it might have been factored in that the government would do a 6-month ban, but I'm betting you it wasn't, because it's one of these tail events. Okay, quoting from the article that I link in the bullet point, a new bill in Paraguay is looking to temporarily rein in the country's nascent Bitcoin mining industry. And for you guys that are new watching, I try never to say that word, especially when they're not even talking about that word. They're talking about Bitcoin, but they don't say Bitcoin, right? Because there is no such thing as a crypto mining industry. It's absolutely ridiculous, idiotic to say that. It's bad faith to say that. Where are they learning this? They probably took a Coinbase educational course. That's where they learned this stupid ass term. Because Coinbase, there are a lot of altcoin pumpers there. Okay. Nascent Bitcoin mining industry, citing the fact that Bitcoin miners in the landlocked South American country are engaging in power theft and interrupting electricity to a country with abundant hydropower and renewable energy resources. On April 4th, a new bill was unveiled in the country to ban Bitcoin mining farms. I mean, the first thing I would push back on is if this is the language of the bill, which I'm guessing it's not because it's in Spanish, but if this is the language of the bill, I would say, well, we're Bitcoin, we're not crypto. So this doesn't apply to us. For approximately 6 months, quote, the creation, preservation, storage, and commercialization of Bitcoin and installation of Bitcoin mining farms in Paraguayan territory are temporarily prohibited. Look at all this garbage wordage. And this has turned into a rant on semantics, but virtual assets, that's a stupid term. Crypto assets, another stupid term. Cryptocurrencies. Now, I don't like this term because Bitcoin is money. It's not a currency. A currency is a denomination, a derivative denomination of a money. Bitcoin is money. It's not a currency. So this is just an affinity scam on Bitcoin. Sorry, son is asking for a band-aid. So the Paraguayan territory are temporarily prohibited. All right. So if this passes, a 180-day ban would effectively stop Bitcoin miners from crippling the nation's electricity grid. Oh my lord. However, the bill promises to end the prohibition on Bitcoin mining activities earlier if the country's electric grid operator, the National Electricity Administration, ensures that miners operated, quote, without affecting other users of Paraguayan electrical systems. Well, what's the odds here? I'm guessing their system is not very well run if they're having this type of crackdown on Bitcoin mining is probably authoritarian socialist leaning government. I don't know too much about Paraguay. I know there is some interest in Paraguay from a libertarian perspective, like a Galt's Gulch type perspective, but this doesn't sound like it. If they're trying to crack down on Bitcoin mining, it sounds like an authoritarian place, which I bet their electricity administration is not very well run, and they're trying to blame their electrical grid problems on Bitcoin miners. But anyway, I say they're idiots. Estimates are that this ban will cost Paraguay $200 million. And here's just a map of this place. So Paraguay here, this is the dam with the reservoir. Brazil, of course. Argentina sticks in here, just a little finger of Argentina. And then Uruguay is down here at the bottom. Let me make sure I'm not muted. I had a sinking feeling. Okay. But I need to make this bigger for you guys. Stand by. It's for guys on Telegram. I mean, we do have people like Evil Spock. He's from Brazil. I think we might have another South American that is in the community or active in the community. But yeah, so this is what's going on here with the dam. Little geography for you. All right, next story is Bitcoin miner Hut 8 has larger, more diversified business model following US BTC merger. Bitcoin miner Hut 8 is a much more diversified company with multiple revenue streams following the completion of its merger with US Bitcoin Corp at the end of last year. All right. Quote, new Hut 8 has approximately 7 exahashes per second of self-mining capacity, and revenue from self-mining accounts for approximately 68% of revenue today, with the remaining coming from managed services, hosting, and high-performance computing. All right. They also hold more than 9,000 Bitcoins. Why did I put this in here? Just because it shows consolidation in the space. It shows acquisitions going on. Lots of moves happening in Bitcoin mining. It is becoming a very mature industry before our eyes. I hope it doesn't become more and more centralized, but it probably will not, because as the price moons, this industry and all associated industries with Bitcoin or Bitcoin mining are going to also blossom. So there's going to be lots of opportunities for people. But this shows the maturation of the space. Okay, next mining headline: Bhutan to upgrade Bitcoin mining in Himalayas as halving looms. Bhutan's investment arm and BitDeer Technology Group are planning to ramp up their Bitcoin mining operation to help offset the revenue impact of an upcoming event known as the halving. I think this is from Bloomberg. Yeah, so that's why you see that language. The partnership between Druck Holding and Investments and NASDAQ listed Bitcoin mining firm BitDeer aims to invest in boosting Bhutan's mining capacity sixfold through the introduction of cutting-edge hardware. The planned upgrades will increase the Himalayan kingdom's mining capacity by 500 megawatts by the first half of 2025. That would bring Bhutan's total capacity to 600 megawatts. So, pretty big deal. This is a country that not a lot of people talk about, but they are, I mean, they're monarchy, but they're getting into Bitcoin mining. So we have El Salvador with their volcano bonds and stuff, and we have Bhutan. So it's spreading. It's going to become a big thing. They're creating the model for others to follow. Okay, let's get into the hash rate here a little bit. Hash rate has spiked over the last couple of days, pulling up. Oh yeah, okay, pulling up the estimate for the next difficulty adjustment to almost 4% 2 days from now. It was 1% last week. If hash rate continues higher like this for the next week, that is confirming evidence of less downside risk for price and the growing likelihood of a price spike. Growing likelihood, not that it's going to be imminent, but as hash rate goes up, that means obviously that there is a lot of investment into Bitcoin mining industry. There's confidence being built by people studying and watching the Bitcoin network. If hash rate's going up, that just seems like a more robust market. And so the likelihood for any sort of price, downside price risk is less. And the likelihood for a price spike after the halving, I believe, is rising. Okay. Mempool. The mempool was flat for most of the week, but had a little spike today with the price bump. I use the mempool as an indicator of volatility during periods of higher volatility, either up or down in price. The mempool should spike as urgent fee insensitive transactions are made. If this current price bump was going to be a big breakout, we would expect the mempool to anticipate it slightly and spike more than it has. So this little tiny spike over here is what I'm talking about. We had a little spike up in the mempool during this price breakout this morning, which is not very big and makes me less confident that this breakout is real. So you can see how you can take all sorts of different parts of the market, the fundamentals in this Bitcoin thing, and try to get an understanding of price and expectation for what price is going to do in the near term. So anyway, very interesting. Let's go on. Inscriptions. So this will be the last section here, guys. And then I'll take a look at the comments and questions on YouTube and Rumble. So I'm using inscriptions as a measure of speculative interest in the Bitcoin market. I really don't have I think that they're wasteful and I think that they're worthless basically, but I'm not a militant Bitcoiner against inscriptions. I think that everything will work itself out because Bitcoin aligns incentives. So people are going to experiment, and that's just what's going to happen. But they're going to end up being on the wrong side of this. They're probably going to lose a lot of money. The market has a way to punish people for doing bad things. And if these inscriptions don't turn out to be very good, they're going to have to pay the price. I mean, I think it's 400 million total in inscription fees so far. So they've been having to pay the price for this thing not taking off. But anyways, I'm using it as to gauge speculative interest, because the speculative interest that was going into inscriptions now might have gone into altcoins previously, right? So altcoins, NFTs, DeFi, those things are losing out their speculative interest to Bitcoin now. So we can, just like we could measure speculative interest in the past, maybe by the performance of the top 20 altcoins, now we can do that through inscriptions. That's my take. We'll see how that works, if it works or not. Much of the altcoin shitcoinery will be happening with inscriptions this time. However, it could be more tame because fees impose a real economic cost. So the numbers have started to spike again after nearly a 2-month decline. See this 2-month decline here? And then we've had a couple spikes, but they have been pretty tame spikes. They did go over 200,000 yesterday. This could be a sign that a speculative cycle is starting back up. We would expect this spike to also show up in the mempool above, but we really don't have confirmation of that yet. So again, using different parts of the market, different parts of the network, different metrics to QC other metrics. And then what should we expect from that when it comes to price? Okay, so that's kind of a holistic way that I look at the market. We also have one here for fees paid by inscriptions. Let me just make this a little bit bigger. Tweak, little tiny bump here yesterday. Nothing significant to report. Nothing like this, right? If we start seeing this pick up. So we are seeing some of the numbers picking up. We'll see if some of the fees paid picks up. And that's it. Let's go to questions. Nothing coming through. I hope I'm still going out on YouTube and Rumble. Let's check Telegram. Spagball says, kids don't actually ask for a Band-Aid. They ask for a Band-Aid every 15 minutes for a week. Well, yeah, they were playing in the back. I don't know what they were doing. And they came in and looked through the doorway and pointed at his hand. And I saw something, whether it was dirty or I don't know, something. And then he had some Band-Aids. I said, go ahead. But yeah, that's funny. Okay, let's check Twitter. See if anybody's making a comment here below this tweet. I don't see anything. So, all right, guys. Well, that's going to do it for today. Appreciate you guys hanging out with me on this Monday. You didn't miss the eclipse. It's not important anyway. But anyway, yeah, thanks for hanging out. Thanks for those guys that support me over on bitcoinandmarkets.com and bmpro.substack.com. And thanks to the community members for hanging out every day, cutting it up. And I'll see you guys later. Bye.